Hey guys, All in Crypto here, and welcome back everybody for another YouTube video. Apologies for the slightly later video. It's been a very busy morning. We're getting lots and lots of interviews and content lined up for you guys to release over the coming days and weeks. We're going to be covering, of course, yesterday's events and how they have moved the markets, or how markets have taken yesterday's events. And what is that event that I'm talking about? We did have, I think it was about 4 Fed speakers yesterday, but we actually had the data reveal for the CPI, which we were all looking at, and markets were certainly looking at for confirmation in the risk sector for this rally that it's had. And obviously, you know, the FX market across the board, all markets, all eyes were on this CPI print, and it came out pretty much at what it was the previous month. 6.4 is the CPI print that we got. The previous one was 6.5. Depending on who you go to, there are some revised CPIs for last month that come out at 6.4. So it means that inflation has, or the rate of inflation has not continued necessarily to go down. It's largely stayed stagnant. Now, we looked at a number of candles that were formed. I will use Bitcoin on the hourly around the time that this took place. This was the kind of price action that you had. It was very indecisive. In fact, I believe it was this price action here. Do I have my chart set to the New York time? Yes, I do. So this was just a candle that then eventually took a direction and actually saw us continue to the upside. The dollar was very confused yesterday as well. And the dollar is something that we should touch on because this is the candle that you got on the dollar. So because markets didn't really know what to do with this print. This is a doji of sorts, although it's slightly elevated. In fact, you can say this is a doji showing indecision. It is on the hourly, so, you know, you can see if it was downtrending, these can often be a good sort of indicator that a direction is about to shift as there's a kind of battle going on. So markets didn't really know how to take this. I didn't necessarily know how to take this and just sort of said, okay, well, it's all about what is the reaction to this in terms of interest rate pricing. And the reason we look at interest rate pricing, which is driven by inflation, is it's what drives pretty much all markets. You know, the US interest rates and, of course, other countries' interest rates. And we saw actually, this is from Michael Brown, Mr. M. Brown on Twitter. You can see this is from a Bloomberg terminal, I believe, and there was actually on yesterday's sort of print, markets actually were, this is implied, so isn't exact, obviously it's not happened yet, but you can see there was this shift up for rates in terms of what markets are expecting having this print, which should have been negative for the crypto market. Now, there's a lot going on with the crypto market. I've been one of few people to come out and say that actually what's happening right now with Gensler and his cronies is actually very bullish because it gives this industry a massive amount of credibility. However, because of the higher interest rate pricing, I'm going to talk about it all, or we're going to try and break it all down. I would have expected markets to have sort of adjusted to the downside. Now, we got that slightly for the S&P. I mean, this is the daily candle. You can see it doesn't really know what the hell to do. Nasdaq sort of took a bit of an uptick. You know, and the dollar maybe should have got a bit of strength on the back end of higher rates for longer, which it's looking like today it has. Gold, of course, is now selling off pretty aggressively. Again, another indecisive day with that print and is now taking a direction. So this is what we've looked at is a downward S&P, a strong dollar, and a downward gold is potentially quite a headwind for Bitcoin, even though it's done this rally. So is there internal things going on with Bitcoin? Because Bitcoin, here's how Bitcoin decouples from the stock market and the dollar, right? It becomes accepted. It gets regulated. And that's going to push, regardless of the macro situation, trillions of dollars into this industry from institutional players that are at the sidelines now, loving what's happening with Binance and BUSD or Paxos, loving what happened with FTX because it gives them a chance to come in and sweep up the board. And that's what they're going to try and do from a exchange and sort of product facilitating point of view. Will they do that with certain cryptos? Potentially. You know, they'll look to buy up the lion's share. That's something that would be bullish for the individual cryptos, but maybe damaging for the industry. And I think that that is something that's kind of going on right now. And you guys will know that we're actually looking at this as a head and shoulders, which is a reversal structure on a large time frame, which ties in with all our other sort of reasons for getting into the market or talking about getting into the market as a group within my Patreons on the 5th of January. And actually, guys, I'll also tell you that we actually bought more crypto before the CPI print, and it's done pretty well. And anybody who wants to join that group, you know, it does really help being involved with a community of like-minded individuals. But we're potentially looking at this reverse sort of head and shoulders. This was at a time when you actually had lots of different, you know, this sell-off occurred not just with Bitcoin running into this key resistance, but if you look at your altcoins, they all did a very similar thing. You know, they all ran into this kind of key level, which I believe it's going to push through and get above. But at what sort of stage? You know, can you see this real rejection? You found your support on what was previous resistance. This is Algorand. You may be now looking for that continuation. So Bitcoin rallying right now doesn't make a great deal of sense basing it on the other markets, but maybe it does because there's internally bullish things going on. Again, the real thing to take from yesterday's rate hike, even though it was basically the same as the one that we had previously, was that markets took that as actually rates are going to be higher for longer. This is market implied. Of course, we're yet to find out until we get the rates. But this is largely what, or the main thing that I'm looking at moving forwards. This was interesting. I was going to go into this. I don't want to keep you guys here for too long, though. You know, the one thing that I'm paying very close attention to is the... we can get rid of that draw now. Government bonds, 10 years. This is going to lead the dollar. And, of course, the twos, which is going to lead interest rates. We did say if you've topped out here, rates aren't going much above 4.8, 4.9, so they could get to 5. But if this goes on and puts in a new high, then markets will also rethink. So there's lots going on. This is kind of a way of looking at this in terms of rates. The 6 month, which has got them at 5, which kind of means that markets are pricing in 5% and above interest rates. UK inflation data came out today. Rate dips for third straight month to hit 10.1. Retail sales in January jump 3%, smashing expectations despite inflation increase. So we continue to get what I think is data that is going to try and support a soft landing narrative. Again, our good friend GBTC, you can see that saw a bit of a spike, you know, and has kind of almost set the pace, you could say, for as a way to look at institutions maybe being interested in Bitcoin for the crypto market. So there's lots going on. We'll see how the stock market opens up today. Current signs of the stock market opening is it going to be a down day. The FTSE's down, gold's down, the dollar is doing very well. But the question is, will it continue to do so? You can see you've ran into big rejection here. If you break this and hold it, expect continuation. If you do something like that on this line, expect continuation and look for sort of levels up here. Which I think would be bad for risk. Again, my main concern is the fact that we got markets actually now pricing in higher rates, but they don't seem to really, or crypto doesn't really seem to have reacted that much about it, that much. The kind of issue that I have with this print is it doesn't really give much. It's double-sided, you know, in terms of the ways you could take it. So there's no sort of clear-cut, I don't think, path forwards necessarily, other than just to watch what the markets do. You know, we have positions. For anybody who wants to find out about my portfolio, you can find out all about that in the Patreon, what I'm buying, when I'm buying, how I'm buying. It's been a bloody good year for us so far. This is what we would really like to see. Something like this, stab through, and then you get that continuation. You can then validate this. You guys can't see that because my big head is in the way. Let's get that off auto. You know, and then we're looking for that continuation. I think a 30k Bitcoin is very, very possible, certainly by the midpoint of the year, which is actually when they have rates coming back down or starting to come down, markets are implying. And of course, the markets will front run that in the same way that they front run going down when interest rates were going up. So that is largely all I've got for you in this video. Apologies again for the slightly later vid. It's been a very busy morning and a busy day yesterday, but hopefully you don't mind a bit of a later one. If I can ask you guys to like, comment, and subscribe, that would be much appreciated. It really helps me get this content out to the people that need it. You know, this is, in my opinion, some of the most genuine and best analysis on YouTube when it comes to the cryptocurrency market and the sort of markets that surround it that affect it. All I've got for you on this one, guys. See you in the next one.